Okay. All right. Well, some of the numbers are starting to come out for Palantir, Kevin, and I should note that Palantir shares were modestly higher when we were talking about the chart heading into the close, but ended up closing down about 0.4%. Have been sort of bouncing around, and based on what I'm seeing in terms of the current quarter and full year outlook, it's looking pretty good. But we talked about the bar being very high, with shares being so close to all-time highs. What stands out to you about these numbers?
Yeah, I think the stock right now is just trying to digest these numbers. I haven't looked into the actual report or the commentary, if you will, but if you're looking at the Q1 adjusted earnings per share, came in line with the street's expectations at 13 cents. Revenue for Q1 came in at $884 million. Street was looking for $862.8 million, so they beat there. And then the guidance moving forward, Q2 revenue guide, they're looking at a range between $934 million and $938 million. Street was looking for $898 million, 98.5 million here. So exceeded that street's expectations handedly. And the adjusted earnings per share estimate for the full year, or the revenue guide for the full year, between 3.89 billion to 3.9 billion. Street was looking for 3.75 billion. This looks like a pretty decent report. I didn't look at any of the commentary though, but the headline numbers say that this is actually pretty decent, and they're still on the right track. You're talking about 39% year-over-year growth when it comes to revenue as a whole. U.S. revenue growth sitting at around 55%. They raised their guidance. I mean, there's a lot to like about this report, but maybe the commentary is really pushing some people back. I'll look in this report here in a second to check it out.
Yeah, Alex, there was obviously a lot of concern earlier this year about DOGE cuts and what it could mean for a company so reliant on government contracts. But based on the much better than expected current quarter outlook and full year outlook, doesn't seem like they're necessarily the target of those cuts.
Yeah, it doesn't seem like it's the case, and quite frankly, it probably wouldn't have ever been the case given the fact of the industry that this company works in. It's so forward-looking. It's AI is if it's existential for Alphabet and Microsoft in competition with one another, it truly is when it comes to the geopolitical chessboard, and we think about the race from that level. So companies like Palantir are going to benefit from that. I see, within their press release, they call AI demand ravenous. Kevin mentioned they boost the revenue guidance. I also see, too, that they see the full year U.S. commercial revenue over 1.18 billion. So that's your non-government contract. So the fact that you're starting to see that other enterprise revenue really start to pick up in some steam as well with momentum, I think is going to be important to the long-term story here. As far as where these shares go, it's going to come down to, Dr. Karp and what the team says, but it's anybody's guess, Caroline. This stock is so in the stratosphere in terms of valuation, it's very difficult to say.
Yeah, and as Kevin and I were discussing earlier, we know analysts aren't on board with buy ratings for this name, the majority in the hold camp. You were talking about some of the commentary from Alex Karp, the other Alex here, Kevin. We can always count on him for some colorful commentary, if you will. He says we're in the middle of a tectonic shift in the adoption of our software, particularly in the U.S., where our revenue soared 55% year over year, while our commercial revenue expanded 71% year over year in the first quarter to surpass a $1 billion annual run rate. We are delivering the operating system for the modern enterprise in the era of AI. Consequently, we are raising our full year outlook for revenue growth to 36%. Guidance for U.S. commercial revenue growth to 68%. So tectonic shift.
Yeah, look, they're doing a phenomenal job, and if they continue to focus on the commercial side of the business, I think it's going to be doing pretty well here. I mean, their onboarding process is very unique compared to some other competitors within this space. Yes, there's been a little bit of concern when it comes to the government contracts, but I think you got to be half and half there. You want to have them wean off of the government contracts because it's very unpredictable when it comes to government funding, just in general, and budgetary measures. But you are also seeing $1 trillion proposed defense budget, which they'll probably get a piece of that pie. I don't see the U.S. government from an efficiency standpoint actually pulling back on utilizing AI within their processes. So it could be a little bit of a tailwind for them. I think the question is going to be price of sales and valuations as a whole, which is why analysts are a little bit skeptical of the name. But yet there's only a few companies out there in this space right now, especially in this environment, that have the top line growth as well as the EPS growth like Palantir does. And they continue to knock it out of the park when they're bringing on customers that generate more than $100,000, even $1 million when it comes to revenue. I mean, they're knocking it out of the park. how much is an investor willing to pay for this name is the biggest question mark. And that's the only failure that it has right now. Technically, and fundamentally, it's doing a phenomenal job, though.
Okay, Alex, want to go to you either for a final thought, or I should note Ford has come out and we're going from one company that actually is providing better than expected, raising their full year guidance, to a company that's suspending their guidance because of tariff uncertainty. I don't think that's a huge surprise. Ford actually outperforming the broader market year to date, actually up about almost 3% year to date, but looks like it could be lower following these results.
Yeah, two companies with completely different successes, completely different problems as well. Last thing I'll say about Palantir, right now the stock's trading down about $3. Anything within $5 either way, I'm safe to call unchanged in a response to Palantir. It trades with extraordinary volatility. The expectation was upwards of a $15, $20 move one way or another. So anything within $5, I think that's sort of an unchanged move. In the case of Ford, a little bit different. Volatility profile much smaller, but a little bit elevated as of late with the tariff uncertainty. They acknowledge that with the suspending of the guidance. And the stock's under a little bit of pressure here in the aftermarket. It's back indicating below $10 a share, which doesn't matter, right? But it's psychological. Single-digit stock if it opens up here.
Okay. All right. We'll see if the conference calls can turn either stock around. Kevin, Green, Alex Coffey, thank you both so much.